A very warm welcome. Thank you for joining us on Business Incorporated. I'm Chimezi Obi Iwago. On the show today, IMF says Cameroon's economic growth to rise to 4% in 2018. Tunisia gets $250 million loan tranche from the IMF. And in South Africa, McKinsey's new boss apologizes over corruption scandal. Let's get the show started now with the markets. And here on the continent, the week started on a bullish note for markets in South Africa and Nigeria. Both indices were up at intraday trade. The JSE index was up 1.36%, while the NSE index was up 0.13%. On the flip side, the market in Egypt was in the red, down 1.10%, and the Kenyan market closed negative on Friday. In the Middle East, the mood was bearish for most of the markets except Saudi Arabia, which was up 0.84% at intraday. Qatar dropped the most, 0.51%. Markets in the UAE were also down. Abu Dhabi was down 0.07%, and Dubai was down 0.35%. In Europe, equities were higher in early trade as investors monitored developments on trade and reacted to news that the UK's chief Brexit negotiator has resigned from his post. Now let's bring in my colleague in Frankfurt, Lars Holter, to tell us more. Hello, Lars. Good afternoon. Good to have you back on the show.
Good to be with you.
Right. So how are the markets in Europe waking up to the exit of Theresa May's Brexit secretary? Are there reactions yet from Brussels?
There is no reaction at all from Brussels because, first of all, this is, of course, a British issue. And to be fair, Brussels did not even have a lot of time to comment on the issue because David Davis, after his resignation just a couple of hours ago, has now already been replaced by Dominic Raab, the former British Housing Secretary, also himself pretty much a die-hard Brexit guy. And that also explains, to a certain degree, why there was not much more of a reaction in the markets here. The DAX, you can see behind me, the German stock market index is slightly in the plus column. Most other European markets up, but also just slightly. Generally, there is a relief of David Davis being gone because he was one of those people who wanted a hard Brexit instead of a soft Brexit. Now, a hard Brexit, of course, is exactly the opposite of what many of the businesses want. Just in the last couple of weeks, you had Airbus, BMW, Siemens, now Jaguar, all saying that they would drastically scale back their presence in the UK in case of a hard Brexit. And just to give you a little bit of an idea of how important the issue here is for some of the British companies, I want to read you a quote here from the director of the Confederation of the British Industry, one of their Chamber of Commerce organizations. She says the #1 priority for British firms in terms of trade is the European Union. Unless you have an alternative way of reaching frictionless trade, a customs union is the right answer. Now, a customs union, of course, that doesn't mean hard Brexit. So corporations, of course, are relieved that David Davis is gone, but they can't be all too happy with Dominic Haas, now his successor.
Well, it seems the Brexit is becoming a tough one for the UK. Anyway, let's look at the data coming in today from the Federal Statistics Office, which says that German exports rose nearly 2% in May as US trade tensions with Europe and China mount. What does this tell us about Germany in the emerging trade fight?
Well, first of all, the good news right here in that little nugget is that the export numbers for Germany were a lot stronger than had been expected. So trade is going well in Germany, out of Germany. But where is the strength? It is within Europe. It's trade that goes out to other EU countries, whether or not they're in the Eurozone of the shared currency here. That is up anywhere between 2 and 6%. Where, of course, is the weakness? We can't be surprised anymore. The United States down. The exports are down more than 10% there. And of course, we all know that this trend right now is not going to get any better as Donald Trump is waging a trade war, not only with China, of course, but also with the EU. So a lot of companies, of course, take precautions here already and see that they can maybe find new markets to replace those that they used to have in the United States.
All right, let's look at the big IPO that happened today. That's Chinese cell phone maker Xiaomi. Had their first day of trading. How did it go?
They can't be too happy. Xiaomi had a pretty weak first day of trading. Now, they kind of knew it wasn't going well when over the last couple of days they had to price their IPO at the very bottom of the range that they were expecting to price in. But now, even though they had priced at the very bottom, they still traded down on the first day. So it's a little bit of bad timing here because on the one side, the cell phone market itself, cell phone business has lost a little bit of its momentum as of late. Other companies have been a lot more interesting for investors. That's data companies, that's online retail companies, the Alibabas and such companies, of course. A cell phone, not the greatest business to be in right now. And of course, also with the timing right now, you have to wonder why they did not just pull out and maybe have the IPO at some later date, considering that we are right now in that beginning trading war between the United States and China, putting added pressure on the markets and, of course, on any company that has an IPO right now.
All right, thank you very much, Lars, for your time. Well, the week has just started, and I guess the stories are just developing, and we'll have quite a lot to talk in the course of the week. Thank you for your time today, and enjoy the rest of the day.